Thank you. Good evening, everybody.
Great. So
Yeah.
George is, as Tabiso said, he's with the University in Rwanda, fountain of knowledge in the very center of Africa, where so much good stuff is happening. I have extremely fond memories of my visit to Kigali, and take me back there any second. Give me a half an excuse, George, and I'll come and visit.
Oh, okay, please. No problem. Thank you. You are most welcome.
Thank you very much. Thank you very much. So
Yes.
our format here is that we are colleagues from across the continent. We are here to share information and enlighten one another on what's going on in our market. So you sharing information as an assistant lecturer at the university, I take it that's your bread and butter. So you don't feel at all ill at ease with the group here. Everybody is here to ask questions, to learn, and to understand. And it's the way we do things, the African way. Pamoja.
Pamoja. Sure.
Yeah.
Great. Yes.
Okay. So I don't know. Do you have a presentation you want us to walk through, or can I fire away with some questions? And as always, we invite questions from the audience that they can just put it in the chat box or raise their hands, and then we can attend to those.
I think I've been shared with the possible questions.
Okay.
So I think you can be asking those questions one by one.
That's
and
okay.
Then as I try to respond, and then if there are other questions or clarifications or comments or something like that from the audience, that will be fine.
Asante sana.
Okay, thank you.
All right. So our Southern African land regime is quite varied. In Zimbabwe, we have freehold, and then if you step outside of our urban areas, you get farms that we repossess from white people. You get communal lands that cannot be transferred. You have to have permission by the sabuk or the headman there to occupy it. If we cross the border to our east and you go into Mozambique, we don't have freehold title there. What is the land tenure situation in the lovely country of Rwanda?
Thank you so much. So the land tenure system in Rwanda is largely two types. So we have freehold titles and leasehold titles. So we don't have customary land tenure system as it is common in the rest of Africa, because our land is all registered entirely in the entire country. So all the parcels are already registered as either freehold titles or leasehold titles. So for freehold titles, mainly it starts with the lease. That means all land belongs to the government. So individuals can be given leasehold titles, and then the moment you develop your land as per the land use planning requirements in place, you can apply for the freehold title, and then you must have developed your land according to the requirements. You must have secured the occupation permit, especially for the bigger projects, for the bigger properties. Then once they go through that, assess and see whether you have really, you have really complied with all the requirements, then you are granted the freehold titles. Otherwise, the majority of the people or the majority of the parcels are owned on the leasehold tenure. And the leasehold term ranges from 49. It used to be 20 years for residential, then 40 for commercial and industrial, and 99 for agriculture. But recently in 2021, there were some amendments into the land law. So now most of the land leases for different land uses, like residential, commercial, industrial, public facilities, administration, they are 49 years. And then for agriculture, forestry, wetland, the lease term is 99 years. And the leases are automatically renewed for Rwandans if the lease term comes to an end. For any Rwandan holding a leasehold title, it is automatically renewed. You don't need to apply for renewal. And then for foreigners, you need at least to apply for renewal. If you need the government to extend your lease, you need to apply for renewal within 90 days before the expiration of the lease. And then there's also something also similar to the leasehold for investors. What is they call it concession leases or concession agreements. And this is the state land that the government gives out to investor in the form of a contract for a specific term also, not exceeding 49 years, if an investor is having a particular investment that the government regards as strategic, investment project, especially in agriculture, mining, forestry exploitation, social welfare. If the project is in line with that and the government has assessed it, the government can give their state land as in form of concession for 99 years. So the main difference between a concession and a lease applies to everybody, irrespective of the project. But a concession is specific to a specific investor, depending on the type of the project they want to invest in, which the government has regarded as a strategic investment. So basically, there are two main land tenure systems: freehold and leasehold. And then, of course, under either the lease or a freehold, we also have the condominium, because we have a condominium law. So if you develop your project, for example, an apartment project, you can decide after completion, you can decide to sell out individual units, and then they give you each individual unit can secure, the condominium title. So it has to, of course, the terms governing that condominium title for individual units will have to comply with also the terms of the mother title. If it is a lease, the condominium also will follow the terms of the lease. If it is a freehold, then the condominium will enjoy the rights of the lease, of the freehold being the mother title. Basically, those are the two main.
No, I really appreciate that. So
yes.
how do you get to land values? What are the considerations when you are applying for a leasehold? So if I've got it and it's subject to me doing the top structure, we're very familiar with that here in Zimbabwe, but what consideration do I pay to get land from the state that I can even start this project?
Like I said, the state land normally is given in form of a concession. So I can say largely that if you want land, for example, for your investment, you can buy from individuals, from private people. So, but if you want it for if you want it from the state land, it has to be a concession for a specific project that they have assessed, and they think it falls within what they have categorized as a strategic investment project, and then they will give you a concession, not a lease. Otherwise, if it is a normal project, then you can buy a land from private owners holding either a freehold interest or holding leasehold interest.
Okay, so thank you for that.
Yes, please.
No difference between urban land or rural land?
In terms of land tenure system?
Yes.
There's no difference, because like I said, every parcel in Rwanda is surveyed and registered. Okay. It is either registered as land being owned by private people or organizations, or land that is owned by government. So there's no difference. The difference just becomes in terms of value because of the location and the use. But in terms of land tenure system, there's no difference. It is either freehold or leasehold.
So when I was in Kigali, I was quite impressed with your deeds office system. I understand that your deeds office is fully digitized?
Yes, it is. Even right now, I think last year, the government launched the e-titles. Nowadays, you don't need to hold a hard copy of your land title. You can have it online. So unless you want it for official reasons, otherwise individuals can access the National Land Authority system database, and they log in using their initials and maybe the telephone numbers that were registered when they were registering the land, and then they can have an online copy of the land title. So everything is digitalized now.
Hey, Banna, try do that with a Zimbabwean Banna. Hey, they want to hold their title deeds. They sleep with title deeds under their beds.
Under the beds. Yeah, you will be sensitizing small, they will understand.
All right.
Yes.
With your online deed system, I was led to understand that you were approaching being able to even transfer land between people without the need for a conveyancer.
Yes, but that is not yet in place. They are still, I think, establishing the system and the structures. So currently, the transfer needs to be physical. But what they have tried to do is to ease the process, because because now every land is registered. So people are using their land for different transactions. So what the government has done is to try and decentralize the notary services to private lawyers. So most of the land transactions can be done through private lawyers at their convenience at everywhere in the country. But for digital land transaction, it's not yet in place.
Okay. So we have systems of deeds offices here, big buildings with lots of files. And when you transfer from Kura to Tabi, so it goes through a conveyancer, it gets inspected, and then it gets transferred. You're saying this is not, you're decentralizing that to private players.
No. Yeah, to private players. So what they do, you can. They are trying to before they do the digitalization, where you can submit for example, if you sell and somebody you want to transfer the ownership, or you have subdivided your land, so you want to register individual titles. It is not yet digitalized, but what I was trying to say is that if it is ownership, for transfer of ownership, for example, they have given the rights to private lawyers to increase, to increase the number of professionals who can assist the government notaries, at least to approve the transfer of ownership. Gotcha. But for other transactions like subdivisions, merging, correction of errors in the land title, it is still within the central district, zone offices. So it is still being done by physically. So you have to, for example, if it is subdivision of your land, you need a surveyor who comes and subdivides your land, have two deed plans, for example, then they submit, the physical forms, of course, with some digital information, which the land officers are going, to superimpose in their system and try to see whether the subdivision has been done properly. So it is still not yet fully digitalized to that level. But what they have tried to do is to decentralize the land transfer, the land ownership transfer rights from government notaries to even private notaries, so that the issue of transferring land, if it is just transferring ownership, then it can be done everywhere with those private lawyers without necessarily going to government offices. No, so there are some requirements. That. Once you submit them, the lawyers will check them. Once they confirm, there's a way they work with the government system and approve and send into the system, and then it is approved.
I appreciate that. I appreciate that. So often in Africa, we talk about land. We fought wars for land. We've got land reform planned in other countries. What is the home ownership situation like? Does the average Rwandan aspire to own land? Does he have access to own a house? What is the setup like?
Yeah, actually, yes. When we look at the mentality and the what everybody would wish to is to to have land and to own a house. So our culture, when you look around, you see people fighting hard, to have their private homes instead of maybe renting. They may not even care about whether they may not even think of weighing the option whether renting is much cheaper than maybe owning a house, but their dream is to own a house because there's a possibility. And on the side of things, when you look at the very low income classes, the government tries to actually, to buy, to develop for them those who cannot afford, who are extremely poor, or those who have been maybe living in high risk zones, in hill areas or flood areas. If the government decides to remove them from there and they cannot afford to build to acquire their own houses or to rent for their own houses, then the government sometimes makes arrangement to develop for them some kind of community housing, and then they are given individual titles for those houses.
So does a citizen pay for that? Or is it like the South African situation where it's a government project and then you cannot transfer it for 7 years, I believe, and then after that it now become you get full rights of ownership. How does the government provide us this development as you're talking to citizens?
So if it is, like I said, if it is they call it the social class, the people who can't afford, yet they need housing. For example, they have been living in a very hilly areas where they think the risks of flooding and disasters are high. Then the government makes a decision to transfer them to save their lives. Then the government develops a project that can accommodate them. So the government gives them the houses free of charge. And like you're saying, in the case of South Africa, also here, they don't allow them to transfer them at least before 5 years. After 5 years, they give you a title, so you can do anything with your land, with your property.
Yep. We have a similar scheme here. We're calling in Zimbabwe. We're calling it the Presidential Title Deed Scheme, where they're trying to regularize some settlements that have been happening. But it's a program that I'm waiting to see for the first time, to see free things being given out, because land is capital, and for one entity that has it to give it away for free would be quite something to watch.
Sure. That's
so
true.
In the urban areas, the ownership, what is, and I know it's an impossible number to come up with, what is the average home value? How are people financing that? Describe where the average Rwandan lives.
Thank you so much. When you look at the housing in Rwanda, especially in the capital Kigali, you could talk about different setups of the housing. Of course, we have the what you could call low income housing, which are more or less of informal settlement, which has been there for some time. And then we have also, what you could call the average or the middle class. Those are mostly those are the most common. That is for the non-storage single family residential houses, which are quite modern. And then, of course, we have, the high end residential properties, and then the apartments that can be either rented out or be sold to individuals. So that is basically the high end is for rich few, the diaspora people, the foreigners, and then the middle class is what it may be common for common Rwandans who fall in the middle class. Now, in terms of yes.
No, go ahead.
In terms of financing, it is basically here the source of finance is mortgage, and the most of the times these housing are financed through mortgages acquired from local commercial banks. Yeah, so of course the interest rate is a bit high. I don't know your experience, but here it ranges from 16 to 18 and sometimes to even 19, except for big commercial projects, because of other advantages they enjoy in terms of negotiating with the local commercial banks, where it can slightly go around 15. But otherwise, the normal housing, residential housing, the interest rate for mortgage ranges from 16 to 18. So that is the most common source of financing, apart from the owner's contribution. Otherwise, there is no any other external source locally. Yes.
Okay. So let's say you've been appointed not just assistant lecturer, not lecturer, you're now head of department. What sort of a house would you live in, and what sort of price does that come at?
I think when you look at that kind of position, that's what I called the middle class, which is majority.
Okay.
So that kind of houses currently in Kigali and the suburbs around, it's in the range of 100 million Rwandan francs. That is about $75,000.
Okay. How much land would be under that?
In terms of size, yeah. Yes. Recently they have revised. We have the master plan, the land use master plan for the entire country. Mm-hmm. So every parcel of land, it is known on which land, on what type of land use. And so for residential, it is normally zoned into about, mainly 4 land uses. There's what they call R1, that is, the non-storage residential houses. And then there's also R2 and R3, which goes into, maximizing, going, density, high rise right. Developments. And the minimum plot size now, it used to be, here the unit of measurement, they use meters and square meters. Yes. So they used to have bigger plots of 20 meters by 30 or 25 by 30. But now the minimum plot size for single family non-storage residential is 15 by 20. That is 300 square meters. Okay. But if it is a development if the land use is for high rise residential, so we are talking about apartments, of course the size can even be as small as 10 by 10. That is 100 square meters.
Got you.
So for that type of house I'm talking about, the minimum should be, at least the land size should be 300 or between 300 to 500 square meters. So that is between 15 by 20 meters to maybe 20 by 25.
Got you. I've got a question from one of our listeners. Rukwa, I believe, is in Arabia there. He says, how many properties are foreigners allowed to purchase?
Thank you so much. Of recent, the foreigners were allowed to buy as much as possible. I mean, it was open to them as it is open to Rwandans. But the 2021, land law, they revised the land law of 2021. It has restricted the ownership of residential land, or actually in general, the ownership of land. It has restricted it for foreigners because they are thinking there has been some speculation where people could come and maybe buy big chunks of land and then they just keep it there without developing it, and has been fueling the prices of land. So the 2021 law has restricted the ownership of residential land to foreigners to 1 plot, unless, so you can only acquire more if it is for investment purposes. So if it is for investment purposes, there are procedures, there are things there are some authorities responsible for that, where you should go through the process. You indicate your business plan, the type of project you are having, and then once it is approved that actually the land you are acquiring is for investment reasons, then you can acquire as much as possible. But if it is a residential land only, or if you're acquiring land that is not for investment, then it is restricted to 1 piece of land. And I think I'm not really sure about the size, but there are strict sizes that you may not exceed. So the foreigners are allowed to exceed that if it is for investment purposes, or if they have invested, there are certain benchmarks of investment amount above which you start enjoying, you are allowed to, to increase the size of land that you can own. But I'm not quite sure about those specific figures.
I appreciate that. I appreciate that. So
Okay.
there are a couple of places that often surprise me for their population and their size. The size of buildings not confuses me, but it feels a lot bigger than and taller than I would have expected. One city is Gaborone. You know, you go to I Towers, you go to the new CBD, and to say this kind of development is for 300,000 people in Gaborone. I got the same sense when I was in Kigali that in the main city there, not just where the hotels are, but your CBD, you seem to have a lot of commercial development within your CBD. What drives that?
What drives that, I may largely say it's the master plan implementation. When you look at the CBD, it's like you're saying, most of there are a lot of redevelopments for those pieces of land that are thought to have been underdeveloped. So because there is a new master plan in place, and this master plan started in 2008, and the first public publication of that was in 2013, which has been revised in 2020. So it specifies, like I said, every parcel. This specifies which kind of land use, what kind of level of development that is required. So when you look at the CPD of Kigali, the commercial city, of course, all those pieces of land, there is a specific kind of land use development of which the existing structures were not complying with. So the government has been trying to, to encourage people to redevelop, to maximize to maximize the use to enjoy the highest and best use of the land, because the existing structures were, too small, were not prime, so they were undeveloped. So that mainly drives the development, that people are obliged to, somehow to comply with the master plan. So if the master plan says maybe you need to develop a mixed use development of a minimum of 14 floors, then, and you have a single, non-storage, old structure, then you are encouraged to demolish and redevelop. So that has been the main, I would say that has been the main drive. Of course, the need also for some space, the modern space, because like I said, the city is it looks a bit new. So the developments were not, there were a lot of, there were lack of, modern commercial space in terms of retail and office and apartments or something like that. So those are the main two drivers of those such development you're seeing.
Who owns those big buildings in town?
They are mainly, I would say there are mainly two sets of people, or the owners. We have, they could be individual people, but also cooperatives. So the government has been encouraging people to form, groups, cooperatives, whatever level, people coming together, forming kind of a cooperative or an association and putting resources together, and then they acquire land, or they have either from one of them, or they buy a new one, and then they agree on kind of development they should put up. So that has, those are the people. But there also there's another main player there who is the commercial banks. So if you look around, most of the houses you see, at least most of the commercial banks operating in Rwanda, most of them own the commercial houses. So what they do, they develop their own commercial properties. So they partly occupy them and partly rent them out.
Okay.
Yeah.
Great. I appreciate that.
And also there's also the Social Security Fund of Rwanda. Also, they have some properties also.
Okay. Do you
Yes.
have deep pension funds?
Yeah, the pension fund is there, but like you may be knowing in other countries, what the role they play, they do their own development. So they don't really finance other people to do the development. They don't even partner with them or something like that, but they participate in doing their own real estate development. So they have a real estate development department where they invest into commercial properties, into high-end residential apartments, something like that. That's the way they play their role currently.
Okay. I've got a
Yes.
question from Lipale Tlale. He's asking, I'm not sure if it's a he or she, they're asking, do you have building lines? And can you take us through your building planning process?
Yes, the building planning process. For example, if you want to acquire the construction permit.
Yes.
Is it what you're saying?
Yes.
Okay, yeah, they are there. They are there. We have them in every district of Rwanda. There is what they call one-stop center, land office, where you can, where you can get the land services, including the construction permit. So, like I said, because there is there's land use master planning countrywide, but also detailed master plans in every district, including the city. So if you want to build, you will have your architect to design the kind of the building you want to do, or the kind of project you want to develop. Then you submit online. They have online portals where your architect or registered engineer can submit the designs, and then they have teams. There's a construction permitting department in each one-stop center of the district, where they can access your online application. It used to be manual, where the engineers or the architects could sign the design, the hard copy designs, then print them, sign and bring them, and then they are reviewed. And then if they want to give a feedback of any comment, they could write, hard written, typed letters. But now it is online, so you submit online. So the architect or the engineer submits, the design, the proposal online on behalf of the owner, and then the team receives it in their portal. They review it also online, and if there are any feedbacks, they will send them online and say probably you need to comply here, because they, of course, once you submit, what they do, they check whether the design or the proposal is in line with the master plan or the land use planned in the area. And then, of course, and other details in terms of the setback from the road, how much you should be off the main road and something like that. And then once they get anything to comment on, they will give the feedback direct to the architect or the person who submitted the profession who submitted the online application. And then the profession can also work on the comments and submit again electronically. So they exchange the feedback until when they can say, the project is okay. And then once they are okay with it, you have complied with the feedbacks and the comments, you have addressed them, so they send notification again to the engineer and say, or the architect, and say the project is okay now, you can pay for the construction permit. So they have also the range of the construction permit fees that you pay. And once you pay, again, you receive your electronic permit. You get your construction permit electronically, and then you can either print it for hanging on your construction site. You can also have it in your phone or laptop or something like that. So the process is there and it is working.
And inspections by council at the various stages of construction?
Yes, they have also the inspection team, but of course, because the projects, the developments are quite big, they have, from the experience I've seen, they have specific projects they inspect, the big projects. Like the one we are talking about of non-storage single-family residential houses, they don't really inspect. But these storage buildings starting from, one story, like ground floor and first floor, they inspect. So what you do after you are permitted to start your construction, once you're done with your substructure, the footings, the columns and all that, you call them, you inform them, and then they come and do the inspection. And then up to certain level, so they also, you inform them, they come and inspect like that. So they have specific projects that they have to inspect. But also with time, they move around to see whether there are some illegal, the illegal constructions. People who could have, built things that are not permitted to build, or they could have given the construction permit, but they violate the rights, what they are supposed to develop, they change it into something else, or they develop something that is not supposed to be developed there. So they do some routine inspections. And then once they catch you, there are some procedures in terms of fines. Sometimes if it is extreme, they can even demolish.
Wow. Wow. So your capital markets, do you guys have listed property companies on the stock exchange? Do you have, or are you planning things like real estate investment trusts?
Really, I'm not aware about that. The stock exchange market, I know, is for normal, stocks and shares and stuff like that. But we don't have real estate property listed. I'm not aware of any stock, any real estate property market. Sorry, any real estate company listed in the stock exchange, and something to do with real estate investment trusts. They have not started.
All right. Now, something that struck me about Kigali is that the retail that I found was more likely single or double story street level. You guys don't have shopping malls as you see them in Nairobi, in Gaborone, in South Africa. What's the story with that?
I really don't know exactly, but what I could comment about the commercial real estate is that when you look at the like I said, the market and the new structures coming up, normally, yes, you find most of them are kind of mixed use. So we have the retail space, but not as big as the level of shopping malls of those countries you're talking about.
Yes.
But basically, it could be open floor plans, but the kind of businesses there are very, they are medium and small. So they end up, partitioning the open space for retail. And then you don't really find big shopping malls. So we don't have them. I don't know. I'm not really sure about why it's not common.
I appreciate that. In terms of your sectors, who is performing best? Residential, industrial, commercial? What is exciting you?
The residential is the number one. For obvious reasons, like the demand, the majority of the people, like I said, would really wish to own their houses. So the effective demand, or the total demand in the residential setup is really higher. So you find people rushing to make decisions to buy land for future residential development, for individual home occupation, or for even renting out. And then so in terms of market performance, the residential comes first, and then the commercial comes second. And when you look at the sub markets of commercial, like I was saying, the demand is much in the retail space. So at least when you look at most of the developments in place, whether in the CBD or the outskirts, the occupancy level for retail space is high compared to the offices. So the offices are still struggling in terms of occupation level. If you try to ask around or to reason it out, it could be because of the rent, because maybe developers acquire these properties through mortgage financing, where the interest rates are high. So they want to set up some kind of rental rates that kind of reflect the kind of investment they have put in. And then when you look at the businesses or the nature of people that are going to require the offices, also the businesses are not all that big. So they find the rents not affordable. So the kind of an issue with the occupancy for offices, but for apartments in those mixed properties, they are doing quite well, and then the retail is the best in terms of demand and actually occupancy level.
Can you give us
And
any?
then for industrial, it's a bit also special because the government started what they call special economic zones for Kigali and the other districts. So every district, most of the districts, especially for Kigali, then we have about 6 or 8 secondary cities, then the satellite cities. They have land that government has earmarked for industrial zones, specifically for industrial zones. So what the government does, they acquire land, then they provide infrastructure and other services, and then that is the land that is allowed for industrial developments. So after the government has acquired the land and they have supplied developed infrastructures and other services, then investors are allowed to come and buy. So what the government do to attract investors, they sell this land at a subsidized price, very subsidized. When you look at the cost of buying it and the cost of the services you would have supplied, and then you relate with the price they receive from investors, it is too small. But the essence is to encourage or to motivate and to attract many investors to come and invest in those industrial plots. And then the government is of course targeting other benefits in terms of other contributions that the businesses are going to make in terms of taxes and other economic benefits. So that in terms of industrial, it is treated that way for most of the parts in the country.
Appreciate that. Can you educate us on what sort of returns are generated? If it's a developer, you're building flats, what sort of margin do you want to make on that? Or if you're holding the property, if I'm renting out a flat, what sort of yield do I get on my money?
I don't have really facts, but I'm trying to estimate, looking at the information I have. When you, for example, you develop your housing and you are looking at selling it, at least you could you look at the cost of land and then the cost of the construction, and then the prices these properties are commanding in the market.
Yes.
I would estimate, I'm not really sure, but at least it should be in the range of of 20 to 30% of your investment cost.
Sure. Sure.
Yes.
And then
And
if
then
I was renting that out,
in terms of yield, in terms of yield, you would say at least for these apartments, they're around 8%.
Wonderful, wonderful. Thank you very, very much. I don't know if there are any parting comments, something I haven't asked you that you wanted to share to our group.
I think you would have asked a lot of questions, which are very appreciative. I would really want to say that you guys, you can come and visit. There are a lot of investment opportunities. But more so, maybe what is lacking really, what we haven't done well in terms of real estate sector is the research, in terms of all these we are discussing, so that maybe we could have like kind of benchmarks that are really researched well, and then they can be informative and for any person who would wish to join the market. The other thing, like I was trying to comment on, is that, like I said, is the cost of borrowing, because you realize the only source, the most common source we developers have is mortgage financing from local banks. The interest rate is a bit high, so and then developers struggle to pay back, and so for them to be able to do that, they try to see the kind of rents that could really help them to do that, and sometimes it conflicts with the capacity that the potential tenants are having to pay those rents. So it's a bit of an issue. And then the other challenge I've noticed in the market is also the lack of feasibility studies for most of the big projects. So people may think maybe this land is prime. So you come and have your business idea that comprises with the master planning in the area, but then you have not really researched well to see which kind of development, what kind of property, the design, the kind of product, the type of space, just to be sure about whether the project is financially viable. And so because of that, you find even the local commercial banks also, they treat big projects as most risky. So the appetite for financing is a bit low, unless you can really prove that maybe you are established elsewhere, you have other good finished collaterals. Otherwise, if if your collateral is the project you are developing and it is big amount, and they are looking at you borrowing huge money that you're going to return in a big time, like 10 years and plus. So sometimes they are reluctant to to finance. Those are some of the issues that maybe we are having. Otherwise, I thank you so much for the good questions, for the opportunity to be on the platform. Thank you so much. Unless other colleagues have a further question for me.
Thank you. I've got a question. Is the IBT or this new modern building design exist in Rwanda? Does that make sense to you?
It is not yet. It has not yet really taken up. But because Rwanda is very much ambitious over, what is possible, we believe probably in future it will start.
Wonderful. No, I really, really appreciate your time and your in-depth knowledge. Your Kigali, and I kick myself for not exploring further, but Kigali is an amazing town. Your master plan makes perfect sense, and you can see that this is an African country with its head moving forward.
Thank you so much. Thank you. We appreciate that comment.
I appreciate.
Thank you.
All right. Thank you so much, George, assistant lecturer at the University of Rwanda.
Yes.
I believe I have Mkomaongu Francis on the line as well.
Yes, Kura, I'm here.
All right.
Good evening, everyone.
Good evening, Francis.
Francis, before I get you into your setup there, is there anything you want to ask of George?
Yeah, George.
Yes, Francis.
What sort of valuation methodologies or approaches that Rwanda has adopted?
Thank you so much
for commercial properties.
Thank you so much, Francis. That's a very interesting question. I must introduce myself also as a certified valuer, a trained and qualified valuer, and been licensed with the Institute of Real Property Valuers in Rwanda since 2014. So I've been practicing as well in the market. So the question you're asking is really interesting. So when you look at the background of valuation in Rwanda, I may say the valuation is very young, the valuation profession is young, and it was really regulated fully in 2010. And by the time it was regulated, we didn't have, I may say, we didn't have properly trained people with valuation background. So what happened when the law was drafted, the valuation law 2010, it gave a provision for most of the people in the built environment, including the engineers, the architects, the quantity surveyors, even the land surveyors. So most of the pioneer valuers were those with non-valuation background. I mean, those that were not trained in valuation, as you may know, but they have been they are in built environment, so they have a background of construction and property. So now what happened is by that time when the law was enacted, and the reason why it was enacted, much as they knew there were no trained people, is that the mortgage, there was also the mortgage law in 2009. So the mortgage business had been professionalized. People had started registering their collaterals with government and the banks. So, and also there was also expropriation law 209. So government was trying to acquire most of the properties in most of land in around CBD and in the outskirts of the CBD for development projects. So there was a need for valuation. So there was a need for regulating the profession. And when they looked around, there were no people with a background, specific background evaluation. So they allowed the registration of most of those people that are in the built environment. So because of that, the commonest approach is cost approach. So that's the common approach people know, people use, people are comfortable with. And of course, not only because of the background, of the qualification background, but also because of the market. So the other approaches, especially the sales comparison and the income approach, require some reliable data, of which, like you may know, in African setup, in the young markets, those data the market is a bit opaque. So the construction approach is the most used common, whether for residential and commercial properties. But what is happening is because the profession is developing. In 2010, again, that's when the government started the school of built environment in the University of Rwanda, that started with architects, the evaluation, quantity surveying, and creative design. So we have now, since then, we have so many young graduates that have the evaluation background that are trying to influence the market and make changes and influence, create positive impact towards professionalization of the profession. So, and of course, the institute is also trying to build the capacity. For example, recently, last month, we had some CPD on the commercial property evaluation, where we had someone from Kenya, a registered valuer from Kenya, trying, to take us through how a proper commercial property evaluation should be done using the income approach, especially the discounted, the discounted cash flow approach. So if I'm to conclude, currently the cost approach is common, especially for most of the valuations, including the mortgage. It is common. It is actually the only approach for expropriation, because when you look at the current practice of expropriation, valuation for expropriation purposes, it is basically the cost approach. Some people even use the quantity surveying cost approach kind of approach. So, but for commercial, people are trying to, the profession is growing, and the institute is trying, to build the capacity to hold a lot of CPDs, to encourage valuers, to use, approaches that are suitable for commercial to reflect the actual values, not to entirely rely on the cost approach. Yeah, that's the situation.
Thank you very much, George.
Yes, sir.
All right. So I'm going to use that as the segue for our second speaker, Francis Nyambiri, valuation partner with the name brand that we know and love in Zimbabwe, Knight Frank. Francis, valuation is a hell of a topic in Zimbabwe, from listed entities with revaluation gains and qualifications by auditors. Valuations, what's going on in this space, Ngoma?
Kura, it's always easy and prudent for us to look at Zimbabwe from the economic side of it. So let me take you through a short presentation that I've put together, because it puts all these questions into context that you have.
Thank you.
So let me share the presentation, and then we'll then tackle that problem about that question on valuations. So I hope I'm allowed to share.
Please.
Yes, let me try and share this.
Tabiso, can we make yeah, there we yeah,
Yes.
can we make sure he's got there we go. Perfect. Thank you, sir.
I hope everyone can see it now.
We can?
Yes, we can.
Good. Let me go on yeah. Okay. Let's start with looking at Zimbabwe from I think there are others who don't know where Zimbabwe is. So Zimbabwe is in the middle of Southern Africa, bordered by Mozambique, Zambia, a bit of Namibia in some corner, Botswana, and then South Africa. That's where Zimbabwe sits, landlocked country, 386,840 square meters of land. That's Zimbabwe. Looking at population projections, we're likely to hit 19 million by 2030. And of that 19 million, 38.4% of that population is likely to be in the urban areas. Economic growth forecasts, there have been a number of forecasts. I look at the major institutions, your Africa Development Bank projecting that this year, actually a downgrade from a 3.6% growth that was projected in 2024 to 2%, which was done in May, and a projection of 33.5% in 2025. World Bank looking at 3.5 this year. This is a January 2024 estimate, and projecting that to remain the same in 2025. IMF 3.2% in 2024 and remaining the same in 2025. Government of Zimbabwe 2024 estimate 3.5%, and that was done in November 2023. So those are the sort of projections in terms of economic growth that we see the major institutions taking up. So maybe the Africa Development Bank estimate of May 2024 may be more appropriate, given that they are now aware of what has happened in the first quarter of 2024. But let's put this into context, the economy. So the economy was naturally expected to slow down in 2024, mainly to do with the persistent macroeconomic instability, high inflation rate, exchange rate distortions, the El Nino-induced drought, the projected low export prices because you are predominantly an exporter of commodities, and also the electricity shortage, load shedding as a result of the little water that has flown into the Kariba, which is the major source of our power. So it was expected anyway that 2024 will be, the economy will slow down. However, in the first quarter of 2024, we see Zimstats come up with some labor market data where the number of employees is estimated to have increased from 3.17 million to 3.29 million. Obviously, this will bring some positive spillovers, especially in household incomes, in consumption, and in the broader economic growth. The only reason why this may not have an impact on the property sector is to do basically with the type or quality of the jobs that have been created. These are not jobs in the tertiary sector, but these are jobs in the primary sector, your mining and agriculture. But one of the critical things that happened is the 5th of April introduction of a new currency, which is now called, or a new structured currency, which is called Zimbabwe Gold, or ZiG in short. This has brought some form of stability, especially in the past 3 months. And one of the critical things is to also know that the multi-currency, it has been indication that multi-currency will be in place until 31 December 2030. However, the introduction of ZiG, it has been stated quite clearly that this is it's a journey that we have started in making ZiG the currency for the country. Therefore, we are in a journey to try to move away to de-dollarize and the governor of the Reserve Bank has been very clear that this is a journey. It's a process. It's not an event. So it's a process that we've started from the 5th of April, 2024. Inflation, we're looking at, because of the introduction of ZIG in April, it automatically means that we now have 3 separate inflation figures being reported. The first one is the USD inflation, which month on month was 0.1%. And in May, and then the year on year was 3.5%. ZIG was minus 2.4% in May, and there is no year on year given that we haven't run the ZIG for the 12 months. The same with the weighted inflation, which is now minus 0.6%, being driven by what has happened in the ZIG sector, in the ZIG part of inflation. Interest rates, the policy rate was reduced in the last monetary policy from 130% to 20%. And average lending rates are now sitting around individuals in ZIG 26%, corporates about 27%, USD 10% for individuals, and about 8.6% for corporates. Exchange rates, ZIG has been stable in the past 3 months, and obviously to do with the local currency liquidity squeeze. It's not readily available. So ZIG in May was an average of about 13.3177. So let's now move to the property market. After painting that picture of the economy, the recent past of what has been happening in the economy, obviously the property market is constrained by the liquidity shortages, ZIG in short supply, and mortgage finance is not readily available. When available, the terms are very short, 2 to 5 years, which in normal circumstances, you think this is only for trade finance or order financing. And properties, in most cases, a long-term play. Obviously, this has been affected by the 2030 multi-currency cliff. No one would dare lend in US dollars for the next 10 years because what happens in 31st December 2030, when it arrives, what will happen? So we're looking at a residential market that has been very active, mainly driven by individuals building their own houses on a self-help scheme basis, where some take 3 years, 4 years, 5 years to build their own houses. So we are seeing a significant increase in prices for upmarket houses. Some have doubled, especially post, if you look at the period just preceding the August 2023 elections, and post that, we've seen a doubling of prices in most of the upmarket sub-markets, housing sub-markets. Increase in the development of cluster houses, mainly driven by change in town planning zones, where mixed uses have been introduced, and therefore where cluster housing, which was ordinarily prohibited in some sections of those suburbs, is now freely permitted. So also the need for security, as people become more security conscious. Cluster housing, where there is communal security, tends to be more attractive. And we are seeing this in the number of units that have been built and people and the absorption that has happened in that sector. The mid and lower end markets, we have seen the prices remaining stable. There's no been change in the pricing of those areas. Commercial, we're looking at limited activity in the commercial sales and development sections. Demand for space is high in high street retail, in the shops, industrial and retail warehousing, and suburban offices. In the industrial retail warehousing, we're seeing some retailing encroaching into industrial areas and a lot of activity taking place in terms of retail. In those areas, typical example being your Granite site and your Masasa areas. CBD offices are continuing to struggle, and it's likely to get worse as we are seeing a number of banks are putting up their own suburban head offices, which means close to about 10,000 square meters is likely to be available in the CBD as soon as these banks relocate. So rentals have remained mainly paid in United States dollars. So your prime rental rates, I've given you the prime there, retail for Harare and Bulawayo. Harare is a primate city So it tends to dominate the country, and Bulawayo is the second largest city, but Harare is more than double the size of Bulawayo. So you're looking at your industrial rates, $2 to $5 in Harare, whereas in Bulawayo, you're looking at 50 cents to about $1.50 per square meter. Capitalization rates on a standardized basis, you're looking at retail 7 to 8%, offices 8 to 10%, and industrial 10 to 12%. That gives you a sort of a background of what the Zimbabwe property market looks like. So Kura, I think we can now get to your questions.
I really appreciate that. Thank you very much for the comprehensive presentation. So let's go. We understand the economy, or those of us here understand the economy. There's the biggest argument on Twitter is always, why is Zimbabwean property prices so high when for $100,000 US dollars, I can buy something very reasonable in Bryanston and Joburg? What is the driver of the differences between Harare residential real estate and regional real estate?
Okay, Kura, the basic proposal is that property markets are local. As much as you try to compare them across regions, across countries, but for all intents and purposes, property markets are local. So it really depends on what is the fundamentals in the local environment, what is happening in that local environment. Harare, Zimbabwe by its very nature has gone through hyperinflation, and that has stuck in people's minds. So the only way to hedge against inflation was to obviously put all your money into property, or most of your money into property. Therefore, the demand for property in Zimbabwe is driven from a way that everyone wants to preserve value. And therefore, the local market in Zimbabwe tends to value property more than any other investment. And therefore, people are prepared to pay premiums for some of the properties. Unlike maybe in Bryanston or in Joburg, where people have alternative ways of preserving their value. In Zimbabwe, the only way you can do it is to put your money in properties. And those are the institutions or companies that survived the 2008 hyperinflation. So that is the reason. It's a local play, difficult to compare it with other parts of Africa or other parts of the world.
No, what a brilliant answer. In my research, when you look at pension funds in Zimbabwe, 50% of their assets are in real estate. That number in South Africa is less than 5%.
Yes.
So the properties in Zimbabwe have an investment value. They're actually a currency of their own that they're being held to store value, rather than saying, hey, what cash flow and what yield do I get out of this?
Exactly, correct. That's correct.
Okay. Now, the investment community, we see a lot of banks holding property. I think Met Bank in particular, if you look at their annual results, they made more money out of the revaluation of a property portfolio than them operating their business called banking. What is with this? What do we read into this perpetual, really significant, like it can be 20 times or 30 times a rental number when you get a revaluation surplus? What is driving that in Zimbabwe dollars, and how do you feel as a valuer signing off those kind of values?
The issue with most of the financial institutions is basically the fact that they had to harden their balances. You know how inflation has been behaving and how the Zim dollar has been losing value over the years. So the only way that they could preserve those balance sheets was actually to put most of that money into hard assets, and property was the only way to do it. Let's take, for example, 2022 to 2023. We were seeing an inflation rate in Zim dollar terms of close to 900% over that period. And naturally, when you look at it, when that is reflected in the valuations, they tend to have given an implied inflation of about 800 plus percent movement in terms of valuation gain that you'd find in most of the portfolios. And yes, it's a huge number, but it's a huge number outside of the knowledge of what has been happening on the inflation front. If you factor in inflation, it's not necessarily a huge number. That has been the revaluation gain. But obviously the argument would be, the argument would be that financial institutions must be doing more intermediation, more lending and more etc. But we all know what lending does. You give someone a Zim dollar loan, and before you know it, they're able to pay it with their monthly salary in Zim dollars. So it was not possible for financial institutions to continue exposing themselves to the Zim dollar. Hence, they hedged and hardened their balance sheets via investments into properties. And that's why maybe they are still standing today. Otherwise, most of them would have collapsed if they had not taken that approach. So we're not so much worried as valuers that the Zim dollar valuation gain is so huge, but it's huge if you don't factor in inflation. The moment you look at inflation, you see that it's a normal revaluation gain that you're looking at.
All right. I'm going to ask you to close down the screen that you're sharing right now so that we can just see the dashboard and see if there are any questions coming through. Great. Thank you. Right. I would like to ask, tell me some of the conversations that you've been in. And I'm not asking you to betray client confidentiality, but you are the valuer. You've given your valuation report. You give it to management. The audit committee comes in. The auditor comes in and says, no, there is very little sales evidence on the ground. We are not confident that these numbers are stacking up. And they do that horrible thing called a qualified opinion on an audit. Where do you stand as a valuer? How are those conversations going? What wringing of hands are going on in the boardroom?
Yeah, very difficult conversations to have with auditors and management. But I think because of the interaction that we've had over the years between auditors and valuers, obviously via the Valuers Council and PAAB, there seemed to be an understanding on the part of auditors of how the market has behaved. You see, we seem to have amnesia when it comes to the property market and to valuation, in the sense that if you look historically, the property market in Zimbabwe has never been active. If you look at it historically, even when we had a stable environment, when we didn't have hyperinflation, the market has never been active. And the reason is very simple. If you take, for example, the commercial sector, most of the commercial properties are held by pension funds and insurance companies, and they rarely trade on those properties. So the evidence has always been very thin on the ground. So all of a sudden, because we are in this environment, people start to think that maybe we must have a flurry or an increase in the transactions, but that has not been the case. So if you historically trace it, you find what we are going through now is not atypical of our market. It's just the normal way our market has behaved even historically. So we have a market that is opaque. We have a market that is thin on trading. So, but it doesn't stop valuers being able to provide numbers that are credible from the little data that is available. Yes, there could be aspects in what has been happening in the economy where there's been some elements of uncertainty, but there are ways that the standards allow us to bring that level of uncertainty to bear on the numbers that we present. And I think we have been able to demonstrate to the auditors how these numbers have been brought about and how these numbers actually stack up given the evidence that we currently have. obviously, I'll be honest with you. 2023 December, the Zim dollar evidence had become a bit dated, and the market had moved away from Zim dollar transactions more to US dollar transactions. And this was, it's not only, I think it has been across the economy. This is when we start seeing even the RBZ, even the Ministry of Finance indicating that 80% of the market seem to have been dollarizing. And that has not spared the property market as well. The preferred currency in the property market in 2023 was predominantly US dollars. People didn't want to transact in Zim dollars. So we are seeing that the evidence in Zim dollars have become dated. And we're still now that we have gone into the ZIG on the 5th of April. And there's no experience of ZIG in the property market. The rentals are not being paid in ZIG. If they are being paid in ZIG, it's only where they are converted from a US dollar rent. And there's very little, I would hazard and say only maybe 5% of the market of that rent of the market is actually receiving ZIG rentals. And this relates to maybe institutions that are related to government. But in most cases, all the players are paying their rentals in US dollars, not only commercial, but also residential. There are US dollar rentals being transacted in the market. So we have now come to a stage where the ZIG, there's no evidence on the ZIG inputs. So it's natural that it will be difficult to provide a number or valuations that the market or that will be, if put under scrutiny, will be able to be justified. So it's a discussion that that has to happen, and I think we just have to be honest and say this is a technical process. It has nothing to do with how you feel. It's about what the technical, the numbers and the data set that is in the market is saying to us. So it's like I was indicating to you, it's now not possible to come up with a year-on-year inflation in ZIG because ZIG hasn't run for 12 months. Yeah. So I would hazard and say it's now not possible in this environment to be able to come up with a ZIG valuation because ZIG has not had sufficient experience in the market. We have to wait for it to have that experience and for us to start having evidence that supports its value. So that's how I think we're moving on going forward.
I appreciate that. I've got a question from Adele Ruisi. For how long are house prices in Zimbabwe expected to rise? Are we experiencing a boom in the country as a whole, or is it just in Harare?
Yeah, we were of the view that at some point we were going to have a burst of the bubble in the residential sector, but it has not come. And the reason is purely to do with inflation. The problems are always corrected by hyperinflation. So it corrects itself and we move on. The majority of the changes have happened in Harare. Basically, that is the position. The boom is happening mainly in Harare. And the other smaller centers, there hasn't been much activity. Actually, a number of the smaller centers have experienced deindustrialization, and that is typical of your Gweru, your Bulawayo. There's been huge deindustrialization, and everything has happened in Harare. And sometimes when you don't look at the policy framework in total, you miss it. This is why, for example, you find the government has come up with this decentralization policy. It's an acknowledgement that most of the activities seem to have been happening in Harare at the expense of all the other smaller centers. But now we are seeing a decentralization of activities to the smaller centers. And we all know, for example, that the government put in a call to action, the president put in a call to action that all these urban centers and rural centers must have master plans by 30 June 2024. And that is pushing to that. If you look at Vision 2030 and this operationalization through the National Development Strategy 1, you find it's all based on decentralization, taking activities to the different centers, because there's an acknowledgement that activity has been mainly centralized in Harare, and we need to send it back to the other centers as well.
Okay. So that we don't have hearsay, what prices are you seeing properties trading at within Borrowdale Brook?
Prior to around June 2023, we're seeing average price in Borrowdale Brook about $550. But now we're seeing prices heading towards the $1 million mark.
Can you say that again for me in English?
Kura, towards June 2023, we're seeing these prices around $550,000. But all of a sudden, we're seeing Borrowdale Brook heading towards $1 million average price, especially for the top end of those Borrowdale Brook houses.
I give up. For our viewers or our listeners who are not familiar with Borrowdale Brook, you can view it as Pakalane in Gaborone or Dainfern in Johannesburg, a gated community with a golf course in the middle. And yeah, it just seems to have a cachet and address that people seem to be prepared to pay $1 million. We've got an anonymous attendee and says, what is your advice to an investor looking to make money out of real estate in Zim?
Yeah, an investor wanting to make money out of real estate in Zim, it's at the moment, what is flying is your cluster houses. We're looking at developers not looking at less than 50% profit on their cost, others heading towards their 100%, especially if you are able to manage your cost of construction properly. So cluster houses tend to be more in demand, and it's to do mainly with, obviously, the security issues that are arising, being fueled by US dollars. Our others call it the National Mattress Bank, where people tend to want to hold hard currency, and therefore having an effect on the security of that money that you have. So people are preferring to be sitting in cluster houses, in gated communities. That's where the value is happening at the moment.
Appreciate that. I'm going to take the last question from the anonymous attendee here. It says, what is the average rental return across high, middle, and low density neighborhoods?
The high density neighborhoods tend to give you a better return. You can hit as high as 15%. And this is to do with the fact, obviously, it reflects the risk that you have there. In the high density, you're not renting the house in full. You are renting rooms because that is the model of renting in the high density. As you go up, surprise, surprise, in your high up-end market residential, you're looking at about 5% return, especially on the income return. The value is in the appreciation, and you may need to stay a little bit longer in there.
Great. Appreciate that. George has got his hand up. He wants to ask you a question.
Yes, thank you so much. Francis, I would wish to ask you a question about the evaluation practice. What are the common issues with evaluation, especially for mortgage evaluations in Zimbabwe?
Yeah, mortgage valuation in Zimbabwe has developed over the years, like in the same way that Rwanda is going through. We went through this in the 90s, where initially mortgage valuations were based on the cost approach. What is the cost of construction and etc. And this was to do with the fact that we're in a low inflation environment. where where the cost was always lower than the market value, because someone would build a house and be able to sell it for a profit. Okay, as we moved on and we get into inflation and etc., the mortgage lending, secured lending valuations changed, and they become more of a market valuation, where the valuer presents a market valuation, and then he has to put it on the basis of a premise that there'll be limited marketing. So through practice, which was generally called by others forced sale value, through practice, that would be about 60% to 70% of the market value was being presented as a forced sale value to the banks. But the underwriting of the loans and etc. had nothing to do with the valuer. The valuer would simply present a number. The underwriting has to be done by your mortgage assessors and etc. within the banks. But that's how we have developed our mortgage valuation practice. So it's purely on the market value, on the premise that there'll be limited marketing of the property. Therefore, you're not exposing this property to the market in the normal way. And therefore, that curtailed marketing period has tended to have an effect on the value that you would achieve, which the practice in the market is about 60 to 70% of the market value.
Okay, maybe to just thank you so much for the answer. To share my experience and see maybe how you would relate with your own experience in Zimbabwe. In Rwanda, the valuers have been accused by commercial banks of overvaluing. For example, they say when the client walks in and they want a mortgage valuation to secure money from the bank, the valuers overvalue. That's how they term it. And then when they, and of course, they ask the valuers also to advise on the for sale values, which is normally the average is 70% for the market. That's what the valuers normally return. It can be as low as 50, depending on the nature of the property. But also now, when it comes to foreclosure, then sometimes the actual realized sale prices from auctions are less than the market values. And of course, there are other factors that play into that, not only maybe the valuation that has been done by the valuer, but other factors that influence the auction. But then the banks think that it is the valuer's fault that they overvalue the property. Now they are auctioning it, so they can't really realize, something that is closer to the market value. Do you have any similar accusation, or how do you defend the valuer's work in that case?
Yeah, we do, but we have a unique situation in Zimbabwe in the sense that inflation has tended to correct all the errors.
Oh, okay.
Over time. So it's rare to unless that has instantaneously happened, where the loan has been granted and the default happens immediately thereafter and foreclosure follows. Maybe that would present such a scenario. But if it's over a period of time, inflation has tended to correct if there are any errors in the valuation, because the values tend to increase with inflation.
I see. Okay,
but
thank you so much.
If any value has been sued, because that's a recipe for finding yourself before a judge.
Thank you.
All right. No, Francis, any final comments that you'd like to leave us with?
Yeah, Zim is a very interesting market, and fortunes can be made. Others may want to call it the Wild West, but others can make fortunes. I believe that this is a personal view. I believe that money can be made in the properties in Zimbabwe, provided you know where to play. You can't be all over. You need to find a niche where you can make your money in the property sector. So money can be made in Zimbabwe. So I would urge those that are bold, and as the president always says, the Zimbabwe is open for business. So is the property market. is open for business. For those that are bold, that are capable, that will want to bring their capital in here. And luckily, we are seeing government saying they now can guarantee you taking your capital out, provided you bring it through the banking system.
No, wonderful. No, I am most grateful. Thank you, gentlemen, George and Francis, for your time. For our 22 guests who have spent the past 1.5 hours. I'm looking at my clock and I'm surprised that we've spent this much time together, but it's been great. As the moderator, I'm always stimulated and energized to talk to my professionals. This time I didn't have to get on a plane, go through security and all the rest of it, but to get insights from particular experts in the market. From me being your host, Kura Chihota, I am most grateful. I hand the microphone back over to our organizer, Tabiso. But thank you, George and Francis.
You're welcome.
You're most welcome. Thank you.
Thank you so much. A big thank you goes to you, Kura, Francis, and George, for the insightful discussion. We would also like to thank our attendees for joining and taking part as well. I hope you will have a great evening, and we are looking forward to joining you again in July. Thank you so much.
Thank you so much, gentlemen.
Thank you,
Thank you so
Tabiso.
much. Thanks,
Goodbye, colleagues.
Bye-bye. Thank you.
Bye.
Bye.